So to start with, we are discussing on the definition of NBFCs, types of NBFCs, unke classification and all that. We will go around that. The very basic question when we deal about is on the NBFC regulation is, what is a NBFC? So what do I call as a non-banking company? So when I discuss around these definition of an NBFC, the very first criteria that I have to see is the PBC test. That is the principal business criteria. क्या मतलब वो प्रिंसिपल बिजनेस क्राइटेरिया कि मैं प्रिंसिपली क्या बिजनेस कर रहा हूँ. That's what determines whether I am a NBFC or not. So when I'm talking about principally मैं क्या business कर रहा हूँ, there is a test that we call it as 50-50 test that is commonly known as. So what does this 50-50 test entails? It says कि आपके 50% or more of your total assets. What is total assets? Basically, I say it as a balance sheet total. So very simple, a total assets is more than 50% of your total assets is financial assets. And so mind this, and 50% of your total income is financial income. So हम बोलेंगे कि आप NBFC हो. I will get into further details, but a very basic test that is 50% of your total assets is financial assets and 50% of your total income is financial income. The very next question that arises over here is, what is financial asset and what is a financial income? For financial income, the definition is very simple. The income arising from any financial asset is a financial income. As simple as that. So the only thing we have to determine is कि income कहाँ से आ रहा है. Income अगर financial asset से आ रहा है, it's a financial income. That's a very simple determinative test. It gets a little complex when we get to the question of what is financial asset. Now, when we talk about financial asset, there is no specific definition as such given for financial asset. RBI Act और कहीं पे भी तुम्हें specific financial asset का definition as such नहीं मिलेगा. So how do we determine whether an asset is a financial asset or not? Here, the RBI Act, if I'm not wrong, Section 45IA provides, and this corresponding sections, I think, I'm not very sure on the section though, provides for a definition of term called financial institution. See, what is a financial institution? So it defines that particular businesses, financial businesses that particular financial institution does. So if I fall under those definition, or if the assets are pertaining to those specific businesses, then I say that this is a financial asset, and hence accordingly उससे आने वाला income would be financial income. I will take very general examples, कुछ examples like I will just explain. Loan is your financial asset. Investments that you make in any equity, debt securities are all financial asset. These are the very basic financial assets. Cash is not your financial asset because it's not important. Cash हर किसी के business. Cash is not a financial asset. A specific consideration over here is fixed deposit. So when I talk about fixed deposit, NBFC master directions specifically prescribe that FD is not considered as financial asset. Then there are other tax assets, security deposits, all are not financial assets. So that's a simple definition. This is what we say the quantitative assessment of whether or not I am an NBFC. This is the one side of it. But as in the starting I mentioned, the very basic test of whether a company is an NBFC or not lies on the very fact that is my principal business about a financial business or not. So when I'm determining, one can be this quantitative test where I put in the figures, मैंने 50-50 calculate किया और test meet कर गया. But there can be some outlier cases where though it can be either ways, though I'm meeting the definition or this 50-50 criteria, but at the same time, my principal business is not financial. Okay. So just to give you an example, this is one of the cases that we handled, that a company which has multiple subsidiaries. Okay. And it is engaged in a business of, say, real estate. It has it's a real estate project company. Major business is real estate. It has some subsidiary. During some financial year, one of the subsidiary paid a very huge dividend. Now, as it had made investments in the shares of the subsidiaries, its financial assets exceeded 50% of the total assets. And during this particular financial year, it's a one-time phenomena. They got a very huge dividend from a subsidiary, and the income side also 50% or more income. So as I said, Dividend is from equity shares. Equity shares is a financial asset. It became a financial income, and hence they breached the 50-50 test. Now, would it be prudent to say that because this company received a huge dividend, it has become an NBFC? Here, a very important point to mind is that NBFC registrations are not that easy, or nor is the NBFC compliance. If I'm saying कि भाई आप NBFC बन गए, it has huge repercussions. I will need NBFC का license from RBI. I have a long list of directions to comply with. And next year, जब dividend नहीं आया, तब you are saying कि आप NBFC नहीं हो. So मैंने जो पूरे compliance systems और सब कुछ establish किया था, what do? I surrender the license again. And frankly saying, NBFC license लेना 6 महीने से कम का काम नहीं है. तो इट कैन नॉट बी प्योरली अ क्वांटिटेटिव टेस्ट कि हाँ एक साल में एनबीएफसी हो गया, दूसरे साल नहीं हो, फिर तीसरे साल शायद नहीं हो, फिर चौथे साल वापस से हो गया. इट कैन नॉट बी दैट. What I have to see is what is the principal business that I'm doing. So when I talk about the principal business, I have to also see the qualitative side of it. Now, what is qualitative side of it? It's a very basic analysis of what the company intends to do or what it's intending to function as. Like I took an example कि जहाँ पे वो कंपनी था उसका मेन बिजनेस was to deal in the property related development and all those activities. वो तो एक साल में टेस्ट ब्रीच कर गया, बट इसका मेन एक्टिविटीज इफ यू सी ओवर द इयर्स यू विल रियलाइज इट्स अ प्रॉपर्टी डेवलपमेंट कंपनी. सो आई वुडंट कॉल इट एनबीएफसी जस्ट बिकॉज वो एक साल में पीवीसी मीट कर गया. सो टू सम अप, a company becomes an NBFC if its principal business is financial business. How do I determine financial business? There are two tests. One is quantitative test, that is 50-50. Another is qualitative assessment. दोनों को साथ में रख के I do an analysis to determine whether the company is NBFC or not. So this is a little bit a case specific analysis. We do it on a regular basis for multiple companies. जहाँ companies हमारे पास पूरा details लेके आती है, we do the analysis, we apply both the T's discussion and accordingly determine. Okay. That's on the definition of NBFC. Now, once I have become an NBFC, there are multiple types. So if I want to go for a NBFC registration also, you will see multiple types of NBFCs. The most common, जो इंडिया में चलता है, the most common that works in India is investment and credit company. So ICC, NBFC ICC. Most of the companies that you deal with, जो lending companies है, जिन लोग का investing or they are merely investing hubs for the family offices, all these companies are registered as ICC, investment and credit company. Okay. Another type of NBFC, that is core investment company, that is we call it CIC, NBFC CIC. These NBFCs का function है to hold the shares of the group company. Now CICs अपने आप में एक total discussion का topic है. I will try if I can cover it today or might be in the coming sessions. Okay. So CIC basically is a company जो group company के shares को hold करके रखे. Now I will take a very common example of it. It's Tata Sons. So Tata Sons is basically a company that holds the shares of majority of the Tata Group. So Tata Group companies के shares hold करके. Majority function is to hold the shares of the Tata Group. So Tata Sons is actually a core investment company that is we call as NBFC CIC. That's a very common example over there. Another type of NBFC that's important for discussion is factoring. NBFC factor. No, I hope most of you are aware what is factor. So in the factoring, what we do is there are few invoice receivables that are there. So we discount, the financer discounts it out and pays you, and then the payment is used to pay off the financer. That's sort of simple basic definition of factoring. There are complexities involved though, but so there is an NBFC factor. Here, just one thing I would like to point is there are two methods by which I can do factoring business in India. First is I go and take a license as an NBFC factor. Okay, so I have taken an NBFC factor license and I do the business. Another is I have a license as an NBFC ICC. So where I have an NBFC ICC, I'm naturally allowed to do financing business. But if I want as an NBFC ICC, I want to do a factoring business, I need an additional license. There are few conditions to be met. If I meet those conditions, I can get an additional license to do the factoring business as well. So there are two ways. Either I get the NBFC factor registration, or either if I'm an NBFC ICC already and I want to get into factoring business, I get a top-up license for doing the factoring business. There are two methods. Another type that's important is MFI, that is microfinance institutions. Microfinance institutions are very, a very important part of NBFC segment. These MFIs, basically what they do is their business is to provide small sized loans to economically backward type of society. So I will tell these are the loans that are like 5,000, 10,000, 15,000. So like I will give an example. There is a rural area, someone wants to buy a cow to start producing milk or to subsistence for family. He will go and take a loan from a MFI. MFI have a very different model of functioning. Okay. But their main purpose over here is to provide microfinance. Okay. This is there. After that, and another important type of NBFC, this is, I think, the most significant one that everyone would have heard, that is HFC, Housing Finance Company. So as the name suggests, housing finance companies are engaged in the business of housing finance. To become an housing finance company, there is again a separate eligibility criteria, or we can say a test that I have to meet. So as under NBFC, I mentioned the test of 50-50 test. For being an HFC, that is a housing finance company, the test is that 60% of my total assets is in the form of individual housing loans. So these are the housing loans that I have given to individuals, as well as more than 50. Sorry, I made a mistake here. 50% of my total assets are in individual housing loans, and 60% of my total assets is housing loans. So there is a little bit difference between individual housing loan and housing loan. To give you a basic example, as the name would suggest, the very basic difference is individual housing loan would be a loan given to an individual. Housing loan is little bit broader, where the loan can be, say, to a builder to construct a residential project. That also qualifies as a housing loan. However, it's not an individual housing loan. So 50% of my assets to be individual housing loan, 60% to be housing loan. If I meet this definition, I'm able to get the registration as HFC. Here, one more thing that I think you should consider is that a ICC, that is an investment and credit company, is still permissible, is still permitted to give out housing loans. They can give housing loans if they want to. So why would I opt for going for an HFC rather than going for an ICC? We will discuss in the further sessions that the compliance requirement for HFCs is comparatively stricter compared to ICC. Because of their type of loans that they do, they have a stricter compliance regulations. But an ICC is still allowed to do housing loan. So why would I go for an HFC? To give you a very broad idea, there can be a very detailed analysis to it. So whether I should go for ICC to give a housing loan or HFC to give a housing loan. 2 or 3 benefits I will give you. Housing finance companies basically get some refinancing from NHB. That is a cheap finance they get because to promote housing. So you get access to those cheaper funds if you get HFC registration. Another is there are some benefits and some eligibility benefits under SERPIC, as well as capital regulations we'll discuss. There are lower risk. So there are few benefits that the HFC has on the funding side, that but that comes with a cost of a higher regulatory debt. So that becomes again a decision. Then there are other few types of NBFCs that are not much importance to us, that are infrastructure debt fund and all those. Not getting into those. Till now, 2 points we have discussed. One is definition of NBFC, type of NBFC. Type of NBFC, one more point that I will discuss over here is CIC. So I discussed MFI, I discussed HFC, Factor, ICC. CIC is one of the most important type that on which we face the most regular queries on. So CIC, when I talk about, how do I become a CIC? So as I mentioned, they hold investments in the group company. That's the main function of CIC. To classify a CIC, you need to meet 2 criteria. One is 90% of your net assets. Now here the term little bit changes to net assets. Till now I was talking mostly in the terms of total assets. For CIC, the term becomes net asset. So what is net asset is basically there is a definition given under CIC master directions for this as well. We take actually total assets, we subtract few items for it. We subtract cash from it, we subtract tax assets from it, some liquid. So all these assets are subtracted from total assets to arrive at net assets. 90% of my net assets is investment in group company. Here, just mind the term that I'm using, investment in group companies. It can be either equity or either debt. Okay. Of this 90, 60% of the net assets. Okay, 60% of the debt assets are equity in group company. So usually when we deal with multiple NBFCs that are making investments in group companies, sometimes this particular test that the 60% should be equity in group company becomes a determining factor, because they might have a lot of debt investments in group companies, but they do not have sufficient equity. So two criteria to be met: 90% of the net asset. Net asset, I told, it's a defined term. The few items we subtract from the total asset to arrive at net asset. And 90% of the net asset is investment in group companies. 60% of the investment is equity in group companies. If we meet these two criteria, I classify as a CIC. Here, CIC also are of two types. When I talk about CIC, two types. One is unregistered CIC. So what is the benefit of unregistered CIC? I don't, as the name suggests, I don't need to be registered myself as a CIC, NBFC CIC. At the same time, I do not have to comply with the CIC master directions. That's the benefit of getting an unregistered CIC. What is unregistered CIC? I'm coming next. And then another would be, of course, CIC, that is a registered CIC that will lead registration. So for any entity that has first satisfied the definition of CIC, if it's able to meet either of these two criterias, it will qualify as unregistered CIC. Okay. The first test is that my asset size is less than 100 crores. So if my asset size is less than 100 crores, so whenever you see a balance sheet and you have to do whether the company is a CIC or not, first check 90% of the total investments in group companies, 60% equity in group companies. The very first test is passed, the company is a CIC. Now I have to determine whether this company is an unregistered CIC or not. The first thing I check is whether the asset size is less than 100 crores. If the answer is yes, the asset size is less than 100 crore, I at the very moment pronounce the decision that it's an unregistered CIC. However, if the asset size is more than 100 crores, then I apply the second test. So first test I failed, then I go to a second test. The second test, there I check whether I have customer interface, which I think most of the CICs won't have, or I do not have access to a public fund. So customer interface is not relevant here. The term that we check for is public funds. Have I access to any public funds? To elaborate further on the public fund side, public funds is not same as deposits. Public deposits is a separate term. So public deposits, public fund is a much wider term that incorporates public deposits as well. So public funds will basically include any type of source of fund in which the public money is involved. Like I will give you took a loan from the bank. So banks, of course, getting by the public. A simpler definition to it, a simpler term to understand the public fund would be, again, it's a defined term. You can get the definition, but a simpler way to understand is any funds that I'm getting other than equity or my own funds, actually somewhere or the other, it will fall under the criteria of the public funds. Hence, if I have access to public funds, then I will need registration. However, if I don't have access to any public fund, I become an unregistered CIC. So again, I will just summarize. To become a CIC, 90% investment in group companies, 60% equity in group companies. You met these criteria, मुबारक हो आप CIC बन गए. Now I have to check whether I have to become an unregistered CIC. सबसे पहले चेक किया asset size 100 करोड़ से नीचे था, unregistered CIC बन गए. नहीं था, asset size 100 करोड़ से ज्यादा था, say 500 crore something. So I have to check the other test, whether do I have a public fund or not. If I do not have public fund, I am again qualifying for unregistered CIC, but if I have public one, then I will need to be register myself as a CIC and comply with the CIC master direction.